Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. Every week I bring you the very latest news about what's happening in the Manhattan market, the Brooklyn market, and the luxury market. I do it so you can stay informed in case you're thinking about buying or selling, or you simply own properties here and you really want to just know how the current market is performing and how that could be affecting the value of your property. The luxury market, this is for September 5th through the 11th. There were 10 contracts signed. That is half of what was signed the previous week. So this is not great for the luxury market. Are we entering a choppy phase in the luxury market? Is this going to be like the stock market, kind of bumping around? We'll know in the next few weeks. Let's just see how things go. Of course, I'm going to be keeping track of all of this and reporting to you. Just so you know, the post-Labor Day, the week after Labor Day, over the last 10 years, the average contract signed for properties priced at $4 million and above is 14. So 10 is not great. Anyway, moving on. Let's talk about the number one contract that was signed last week. It was 4A at 177 9th Avenue in Chelsea. It was asking $12.5 million. Started marketing in July. Unit has almost 3,200 square feet. It includes 4 bedrooms, 4.5 bathrooms. It has views of the gardens and the theological seminary. So very pretty, sweet, kind of tranquil views, let's say that. The seller paid just under $10 million for it back in July of 2017 and then completely renovated the property. The building is called the Chelsea Enclave. It's a Condop, which is a co-op with condo rules. The amenities include a doorman, a gym, a roof deck, and parking. The number 2 contract was apartment 1504 at 515 West 18th Street. It was asking $9.55 million. They raised it from $8.775 million when the building started marketing in the summer of 2020. Just so you know, this is new development, right? This is not a resale. This is still being sold by the sponsor. The condo has 2,536 square feet. It includes 4 bedrooms and 4.5 bathrooms. The building is known as the Lantern. It was designed by Heatherwick Studio, architects of the Vessel at Hudson Yards and Little Island. Amenities include a doorman, a health club that features a 75-foot swimming pool, infrared sauna, a hot tub, massage treatment room, steam rooms, a playroom, library, game room, and a yoga and meditation room overlooking the Highline Park. Sounds delightful. Let's talk about the statistics for last week. The total weekly asking price sales volume, 61,219,000. That is the lowest sales volume, asking price sales volume all year. This is why I say we are in a very choppy time in the luxury market. The next few weeks will tell a little more about the story of whether this is a trend or whether this is just a moment in time. The average asking price, $6,121,900. The median asking price, $4,872,500. The average discount from original ask to last asking price, 5%. Now, have we seen higher? A little bit higher discounts. Have we seen lower? We were seeing lower. Like I say, when we start to see a shift, as we're seeing even in the discount figure for this week, it's something that we are paying attention to. So let's see what goes on next week. The average days on the market, 635. That is likely to do with the fact that some of these are new construction. Some of these, like the number 2 contract, started marketing in the summer of 2020. So these properties have been on the market for a while. It happens. Okay, that is it for this week's look at the state of the market in the luxury sector. Let's move on now. We're going to talk about what happened last week in Manhattan. Here's what happened last week in the Manhattan market. If we just take a look at the kind of the 1 week look, as you can see in the chart, we saw a big jump in the weekly pace of new supply coming on the market. It was an over 300% change in the supply. So we're starting to see people putting the properties either back on the market or new properties are coming to market. This is very seasonal behavior that we see this after Labor Day. Now, the contract signed for last week, 141. That's down almost 18%. Again, there's a seasonality going on here. The buyers aren't quite back yet. They are just beginning to look at the new inventory and they haven't made a lot of decisions. What has shifted and what you'll see is that we are now kind of in an even market. We had been very much favoring the sellers over these last many months. We're now in a more neutral market. Going forward, again, by the end of this month, we will know a whole lot more about what the buyers are going to be doing. Are they going to start stepping up, signing contracts? And what's going to happen with the inventory? We're going to continue to see a rise in the Manhattan inventory. But for right now, too soon really to tell. Why? Because this is seasonal. We are used to September being a kind of quiet month until it gets to be towards the end of the month. Now let's take a look at some of these charts. Okay, so the supply chart. The Manhattan inventory did pop higher as the fall listing season got underway. You can see the measure of this going back quite a ways, how we are in this seasonal trend of inventory that rises a bit post-Labor Day. The demand or the pending sales, we're heading to kind of the lows of the year. Summer is ending and the buyers have yet to begin, as I mentioned before. In the new listings, we're seeing a bit of a spike to start the fall season. But, if we look at the previous years, it's still fewer properties. And I think the next few weeks will be telling. Contract sign. The contract sign activity fell off. The shortened Labor Day week definitely played a role in this. Again, we'll know more in the next few weeks as the buyers begin to be more engaged with the market again. Now the summer is ending and new properties are coming on the market. Interesting thing with this chart, the Manhattan negotiability, this is showing listing discounts, right? Discount from original ask, discount from last asking price. Lots of statistics here. Essentially, it comes down to this. We are seeing relatively low negotiability between from the last ask and original ask. Even if you look at both of those, we're not seeing huge negotiability between, let's say, 3 and 4.5%. This is not, buyers there. This is why I say there's opportunity for you, but please don't expect that you're going to suddenly get huge discounts. This is not like the days of the big COVID discounts. So don't expect you're going to get, a 10% discount, let's say, unless someone was seriously overpriced to begin with. Good to know. Sellers, also good to know. This is a price sensitive market. So if you want to attract those buyers, please be sure you are in alignment with the market so that you get your deal done. Again, first 30 days, that's when you're going to make the most money. And you can see that buyers are engaged. They're looking, but they are going to wait until they see what they think is a great opportunity for them. If we look at there's no chart for this, but I just want to say the negotiability the discount that we're seeing for the average median price per square foot is only about 1.5% right now. That was for July. We don't really have August statistics yet. They aren't quite in. So back in July, we saw about a 1.5% discount on the average median price per square foot. And for the median selling price, we saw something a little more in July. We saw about a 6% discount overall between the beginning of Q3 and Q2 of this year. We're not quite finished with Q3, so we shouldn't say for sure that we're going to be really at this 6% discount. But at the end of the day, we're not seeing anything earth-shattering here in terms of big discounts. So buyers, take advantage of the negotiability that there is. Sellers, be very cautious when you are pricing your property. If you're a serious seller and you want to get your deal done in the fall, make sure you're properly aligned. Always happy to talk about that. Please, if you have questions about it, post them below. I will happily answer them. And if you want to just contact me directly, happy to get on a call with you and talk with you about more specifics as it pertains to you. Okay, let's now move on to the Brooklyn market. Brooklyn has been performing a little better from the standpoint of the sales have been continued to be stronger than in Manhattan, and this week was no exception. As I mentioned, in Manhattan, the market has now shifted. It is a more neutral market. Let's call it that. In Brooklyn, however, we are still seeing a seller's market. Let's take a look at the jump in supply. For last week, it jumped almost 103%, 272 properties. That's the weekly pace. Signed contracts down 24%, 95 contracts were signed. This is seasonal, as I said before. Continue to think about these next few weeks as being a kind of a transition period. We're wrapping up the summer, the slow period of the summer, and now we're going to move into the fall where more buyers will come back into the market, more properties are coming on the market. Towards the end of the month, we will know more about where the market is going. What we saw, and if you can see from this chart, the supply has ticked up. The listing season technically begins after Labor Day, so we're beginning to see signs of that. The demand, we can see that there's a downtrend in the pending sales. Does that mean that the pending sales are kind of coming to a close? Still too soon to know. We're going to continue to keep an eye on that. The new listings, they popped after Labor Day, but they are still, like with Manhattan, below historical levels. Contract signed, contract activity has fallen to new lows. Again, this was a holiday shortened week, and that definitely had an impact on the ability to actually get something into contract. It was a practical kind of thing, if you think about it that way. Now let's take a look at the negotiability in Brooklyn. So the Brooklyn discounts, they've retreated a bit. We're now a little bit above zero. They were around 2% for June, July, kind of early Q3. Prices are reflecting that change. As with Manhattan, the story has not yet been written. We do need to wait a little while to see where we really end up with these discounts. But buyers, again, probably even more than with Manhattan, if you see something, yes, definitely see what kind of a discount you can get, but don't expect anything huge. We're not seeing indicators of that. And as you can see from the tracking, that is not actually what is happening. We are seeing, if anything, some negotiability. Sellers, I'm going to just say it one more time. Make sure that you price your property properly so that you can get your deal done in the first few weeks, get your contract signed in that first month. That's how you're going to make the most money. Okay, that is it for this week's look at the state of the New York City real estate market. I will be back next week with more up-to-the-minute news on what's happening in the luxury market, the Manhattan market, and the Brooklyn market. In the meantime, please post your questions. Let me know if you want to know something. If there are things that I'm not covering that you would like to know more about, just let me know. Please post it below. Please feel free to share this with people that you think it would help in terms of having this kind of information. Feel free to subscribe if this kind of content is helpful to you. I'll be back next week. In the meantime, take care.